Very excited to be here today and with me this great panel. So like Mike said, this session is called From Unicorns to Sea Dragons. So we all know unicorns, but what about sea dragons? So sea dragons, they are rare, they are tough, and they thrive in the deep. And in this session, we will try to explore how investors spot them just before anyone else does. And in one of the most exciting and underexplored markets, the blue economy. So we're going to talk today about everything from ports to shipping to aquaculture to energy, bio, marine, and of course the AI that tie everything together. So Uri before said that his panel is going to be the most interesting one. So we're going to try to keep another promise. And we'll try to be as practical as possible and try to really understand how investors evaluate entrepreneurs, investments, and AI plays. And second promise that we can try to keep is to keep it in a fast pace and try not to lecture, but to give mostly tips and, like the other promise, be as practical as possible. So before we start, let's try to get to know you a bit better. So if you can, one after the other, in one sentence, tell us what is your focus and how does it lie with the blue economy. Bracha, let's start with you.
Thank you, Einat, and thank you all. Do you hear me correctly? Great. And thank you all for being here. So I'm Dr. Bracha Halaf. I'm the co-founder and managing partner in Gravity Climate Fund. It's an early stage VC. We invest in climate technologies, in energy technologies, where our focus is on three verticals in general. It's novel materials and chemical processes, it's energy, everything in and around, and it's both hardware and software, and in climate adaptation and resilience technologies. We are active for the last year and a half, invested in 5 companies already, and we are here to see a lot of new innovations that is taking place that has to do with our focus areas.
Thank you. Shalom, everybody. I'm Henry Gazay. Thank you very much, Einat, for being here and moderating this panel today. Very excited to share with you my background experience in the blue economy. So I'm Henry Gazay. I'm a founder of Blukap. Blukap is a VC investment firm specialized in the blue economy. That's the only thing we do, and we over-specialize in biotech. My background is biopharma. I was a founder of a firm that I sold to Carlyle in 2019 in the biopharma field. So we're looking at biotechnology altogether, which includes, of course, biopharma, but also nutraceuticals and aquaculture, all the nutrition. So we're here to meet with Israeli startups and the Israeli ecosystem and share feedback of experience of investing in these companies.
I'm Yoni Heilbronn, co-founder and managing partner of IL Ventures. We're an early stage fund which is focusing on what we see as disruptive technologies for legacy or traditional industries. So this is why obviously the blue economy is very relevant. We're focusing on areas related to logistics, supply chain, energy, robotics, and AI. Happy to be here.
Hi, my name is Ilan Tevet. Most of my professional experience has been in the telecom space, but about 3 years ago I decided I want to shift into energy. One of the reasons for that is realizing that energy is a network, right? And I've been a network guy for forever. I'm here representing Iron Nation. Iron Nation is a VC fund that was established 3 days after the war started. Since then we've been kind of a fund on steroids. We raised $50 million. Investing in 24 promising startups. 2 of them I'm going to talk about further today because they relate to the topic of this event. Thank you.
Hi everyone, I'm Omer Geller. I help lead our office in Israel for Jefferies. Jefferies is a global investment bank with 6,000 employees. We're a top 5 investment bank among our competitors globally. Advise companies across all industries and sectors on strategic transactions of M&A, selling companies, acquiring companies, IPO, and large and meaningful capital raises on the equity or debt side. We normally work with companies in the hundreds of millions of dollars, and these are cross-border transactions that we do out of Israel. We have a team of 10 Israeli investment bankers. Israel is a huge focus for us at Jefferies. It wasn't always the case. We've grown in recent years, have taken meaningful market share with Israeli clients as well. Always looking for the next trends, the next waves of innovation that will drive interest from global investors and global strategic acquirers into the country, and that's what we do. That's the reason I'm here, and I'm very happy to be on this panel.
Okay, thank you all. And now that we've gotten to know you a bit better, we'll try to explore where the blue is and how we take it to the market. So Henry, we'll start with you, and you mentioned before, but your fund is dedicated to backing transformative startups, blue tech companies, in real-world impact. So in that context, what is the spark that make you say, this one is worth backing? And if you can, tell us, please, how do you see opportunities emerging in Israel?
Yes, okay, thank you very much. So the first thing is that you mentioned impact and blue economy. That's certainly one thing that in many countries it's very linked. And a lot of people even drive impact before economy when they speak about blue economy. We look at it on the other way around. For us, investing in a company and for having impact that lasts, you need to make sure that the company is economically viable, that it's real business, and then looking at impact. Does it have a positive impact? If it has a negative impact, we typically won't invest or won't consider an investment. If there's no or positive impact on the ocean, that's a good driver for us and for bringing investors with us. So this being said, we specialize in, as I said, in biotech, and we strongly believe that there's a huge potential in biotech coming from the ocean. Blue economy is it's a small sector, investment-wise. It's less than 1% of the climate investment, but it's a big sector if you look at all the verticals in blue economy. It includes shipping, it includes energy, it includes some parts of biotech, as I said, etc. So nutrition. So we over-specialize in a way in a sector that we believe is the sector with a very large potential for growth, which is biotechnology. The reason for that, there's a number of things for that reason, but the reason for that is that there's a very large untapped biodiversity in the ocean. Very interestingly, we spend a lot of money, nations spend a lot of money sending probes on the moon or Mars to find for sign of life. We don't spend 1% of what we spend on planets in the ocean. And the ocean is full of life and full of unknown life. So our vision and our belief is that it's going to be a reckoning at some point and saying, okay, life is here, unknown life is here. Most of the biodiversity in the ocean is unknown. And what you have is acceleration when you look at, for example, drug development, acceleration of drug discovery and drug development thanks to AI and robotics. So once, with that reckoning of so much biodiversity in the ocean, it's almost like the new drugs of tomorrow, or the new compounds used for aquaculture of tomorrow will come from the ocean and will be helped by these technologies.
Okay, interesting. Bracha, it's interesting to see if that aligns with what you're seeing in the climate tech crossover, where blue tech solutions sometimes can start overlapping with climate solution or climate innovation.
Exactly, and I'll take you through the verticals that I've mentioned before that we focus on and see how the blue tech align with that. So I said novel materials and chemical processes. The oceans are the greatest resource for everything, from nutrition to minerals, to not to mention oil and gas, of course, and all other things that we don't even know what's out there. So that's one, and it's also the greatest regulator of our climate through the carbon cycle, of course. It's also the one aspect of our Earth that is mostly affected by the climate change. So when I talk about technologies for climate resistance, climate change resistance and adaptation, so for sure it has to do with what happens to the oceans in that regard. And in terms of energy, I mentioned before oil and gas, and of course the oceans themselves are the greatest force and hence the greatest energy source out there, but also all the transport that is taking place, most of the transport of goods transport traffic on Earth is taking place through the oceans, and therefore it's most of the emissions and most of the fuel consumption where it takes place. So whatever happens there and how we can make it better and more efficient, that's where we focus on. And I'll give you an example of one of our portfolio companies that is presenting here today also, named Tetis AI. So they are actually using only software and AI tools in order to reduce the fuel consumption of cargo ships through their journey. How they do it? They take into considerations several aspects and characteristics of the ships itself, of the journey, of the timing and the being just in time into the port that they are about to get there, and just recommending the right speed of the cruising speed at each part of the journey. That's alone, without doing any modification that is hardware dependent, that it takes a lot of time, can make up to like more than even 10% in the consumption of fuels and hence emissions. So that's only one example of how we look at it and how innovation and startups in this field are very much connected to our focus areas.
Well, that's a very good example because we also invested in this company. And speaking about investments, Ilan, Iron Nation has already invested in 2 blue economy companies. So without naming specifics, unless you want to, can you tell us what did those founders prove that gave you the convictions? And when you look at companies in this space, what are the 2 make or break criteria that you focus on?
Thank you. Well, obviously, would like to have to invest in companies with great founders who try to address a big enough challenge in a big market. But for us, especially as a fund that was established in a kind of an emergency situation, we were established just a few days after October 7th, in an environment where many founders found themselves in a situation where the investors are taking a step back. The year before that was also not easy for many of these startups. So there was a time essence there, and we wanted to be able to react very quickly and identify those startups which are great, which we can help them, providing them kind of a bridge, extending their runway until they are able to make the next round. So for us, it was really important to identify companies who have a strong validation from the market. And the 2 examples I want to talk about here are Hoopo and Airways. Hoopo provides a solution that allows to monitor unpowered assets. For example, imagine a container, an unpowered container that is transported on the ground and then is boarded on a ship and then it goes off the ship to the final destination. It's not powered, so it's very difficult to monitor the exact location. They provide kind of a solution for that, which allows their customers to improve the efficiency of their operations, get better visibility and predictions on when their stuff is going to get to the right location. One of their first customers was actually TIM. And this made a huge difference for us, obviously. TIM was not only a large customer that can help them validate the solution, but was also an investor. So that was like a quick decision for us. Another example is Airways. Airways develops an air traffic control system for drones. And one of their first customers was the Port of Rotterdam, which is the largest port in Europe, one of the top 10 ports globally. So again, it gives us the feeling that this is something that we can rely on. There was a great team, a great market, and a strong validation.
Okay, so touching the market is very essential for you when you are checking companies. So we try to understand a bit where the blue opportunity lies, but we're here to discuss a bit of AI. So let's look at what is changing with AI. Of course, that AI is getting most of the attention, but investors know real opportunities often sit in less crowded spaces. So Omer, from your global perspective, what durable innovation trends stand out to you, and where do you see blue tech proving itself, beyond the AI hype?
Great question. Obviously a big one. So if I step out a bit from blue tech first and just let's talk about AI, there are probably three constituencies that are impacted or impacting what's changing. One is the companies creating the technology of AI, so think OpenAI. Two are the companies that provide the infrastructure, semiconductors, data centers, and so on. And three, and that's definitely the biggest constituency, and blue economy falls in that bucket, and probably any industry or any company, is who is using AI and how do you do that? And where we see the hype right now across different sectors, from cybersecurity, infrastructure, software, internet companies around content creation and media and social networks and pretty much everything, is do you have a good use case of AI? Are you utilizing, are you getting everything you can out of this great technology that is really changing everything? And the hype or the interest comes from, is this company able to do that? Is this company going to survive in AI because it's going to disrupt? And more importantly, do you use AI as an offensive weapon, meaning as a way to become better, as opposed to, is AI going to disrupt your business? And that's kind of what we see everywhere. So the more, your question was on hype, the most hyped companies or hyped sectors are those that have a really good use case of utilizing AI to be better. Again, that falls into blue economy without going any specifics, but every company, every operator, every investor to some extent is asking themselves, what do I take out of this technology? How do I become at the forefront? How do I utilize that to be better? And we're seeing nowadays, and we will definitely see more in the future, AI first companies, meaning companies that their business model is just completely different in how they operate using this technology, the amount of resources they deploy to create their products, the way they go to market, the way they that they manage their employee force, and so on. And that is what, from my perspective, when we look at companies in the more mature places and buyers or financial investors are looking, is this something they want to buy? That's probably the first and the last question they ask as they think about the future, meaning how will the next 5 or 10 years will look for this company. So AI is a hype word. It's often used in every second sentence, but there's also substance behind that cannot be ignored. And in each specific case, everybody needs to kind of tailor their story and their real kind of value proposition, utilizing this technology and what it enables.
Okay, so let's see if this is a hype or if it really touches reality. Let's try to be more specific, and Yoni, let's speak a bit about ports and shipping, because these are really tough sectors or vectors. How can or where do you think that the AI can really cut cost or improve reliability? And what proof would you need before you lead an investment?
So basically, if you look at the maritime and the port environment, you can see two main things. One, there's a lot of data out there, to which AI can obviously assist. B, I'll be gentle, there are inefficiencies, let's put it this way. So when you combine the two, there's a huge need in areas from route planning to yard optimization, crane management, customs, container tracking, for example, our most recent investment was in a company called P-Commerce, which its first design partner was actually the Ashdod port, and they used them for container tracking. And today, again, this company, which is already progressing very nice, although not specifically only in the maritime, our port environment, we have as an investor team as well. So it obviously means something.
Next time we'll have a seat for Tim as well in this panel.
You know, we're in Haifa, they're not far away. So in the end, I will make an investment if I have a relevant team with a great technology and when the timing is the right one. Having a must-have product, this doesn't really relate only to AI, but in general, there has to be a real need and it has to be a must-have solution, not a nice-to-have solution. So this is at least my view.
Okay, thank you. We started speaking about it earlier, but let's just take another look at the investor equation, meaning how do we balance impact, sustainability, and cost in ocean innovation? Bracha, you can take this one?
Sure, love to. So, of course, as a climate tech VC, we care about the effect that our investments make, the difference that it makes, the impact that it has. But we are a VC, meaning we are here for profit for our investors, and that, of course, says that each of our portfolio companies has to be a for-profit company, and it has to make a lot of money. And how does one company makes a lot of money? But by making their clients making or saving a lot of money. Okay, so it's all around that. And the issue is not taking a super complex solution that you need to really take, that it will take a lot of time and a lot of efforts and a lot of money for the clients in order to see these savings, to see this money coming from, but how to make things that are easily adopted, easily and very fast adopted, and you can see results very fast. And as I gave the example before, that is AI, for instance, does exactly that. You don't need to put anything and to change anything in your ship. You don't need to change anything in the way that you work, because take into consideration, maritime is one of the most conservative industries out there. The people that you are working with, your clients, are super conservative. They're not used to all this innovation and technologies. So everything that you offer them has to be very easily adopted without a lot of efforts, without changing how they work. And what they do is only taking the information, like most, I would say passively, from whatever they're doing, and just telling them, just change this speed to that one, and you will see an effect, and you will see an effect in the next cruise. You don't need like a couple of years before you see an effect. So that's what we are looking for, and that's what I think other investors should look at, how you make a lot of impact with a minimal effort.
Okay. Omer, let's take it to your side. When you look at diligence for exits, let's focus on exit. Is efficiency part of the story yet, or is it still mostly about financials and market structure?
Well, the answer is both. I think why does someone buy a company? Either it's a great technology, or they have access to amazing customers or a geography that the buyer wants, or it's just a great financial story, and that's where efficiency comes in. In most cases, it's a mix of all. We sometimes see strategic companies buying smaller startup. I mean, not sometimes, we see that a lot. They buy them for the technology or for the team, kind of acqui-hires and so on. So in those cases, the efficiency is not necessarily what they look at on day one, but ultimately everyone's running a business and is looking for something that can make money, as was just said. So that's kind of where efficiency comes into. So it kind of depends on who the ultimate buyer is. If it's a strategic buyer, they would look more into the technology, the talent of the people, sometimes access to a new set of customers, and mostly kind of cross-sell of products and so on. And a lot of times efficiency would be something that they also take a different lens at, meaning if this company was owned by us, we could actually do a lot of things much more efficiently and in a better way. Financial investors dig much deeper into that efficiency. We call it unit economics, meaning even if it's a smaller company that's still a startup and still growing and maybe even still burning cash, over time when they get scale, is that going to be efficient? Is every dollar that we burn on R&D or marketing or so on going to yield much more than that long term when we get scale? So that's where we as advisors dig in with our clients a lot in kind of developing that story, because we know this is where buyers and financial investors dig into as well. So efficiency, just to summarize, is important, because again, these are all for-profit businesses, and unit economics need to work in a way that makes sense for shareholders.
Okay, now let's try to understand what is the pathway for startups in this domain, and how can founders build their startups toward this from day one. So Henry, this one is for you. Exits in blue tech, they don't look like classic SaaS. So please tell us your perspective in this matter.
Yes, absolutely. So in fact, for me, and to Omer's point, exits in the blue economy are more strategic than IPOs. Clearly, thinking about, to who am I going to sell the company? What's the need that I'm covering? Because it's not going to be an investment just for the IPO and going on the market and being public, but it's going to be because I'm covering a need for a company. I just want to give a number of examples to be very pragmatic, because the blue economy has the reputation not to create unicorns. There's, don't repeat that, please. but there's a lot of people even talking to investors, and they say, there's no unicorns in the blue economy. Well, I want to prove that it's wrong, and I'm going to give you two examples coming from the biotech world in the blue economy. The first company is called PharmaMar, and PharmaMar is actually publicly listed on the Madrid Stock Exchange. The only thing they do is sourcing drugs from the ocean. Their valuation is around close to $1.5 billion. They have great drugs in the treatment of soft tissue sarcoma, drugs in the treatment of small cell lung cancer, and this is all sourced from the ocean, from sponges in the ocean. A second company, which is really interesting because it really is strong both financially and in impact, is called Kerecis. What Kerecis does is recuperates the fish skins from certain fish and uses it for treating wounds. That could be interesting, as a matter of fact, for even contracts with the army. It's a very powerful way using fish collagen to cure wounds. This company has been acquired in 2023 by Coloplast for $1.3 billion. So here you go, you have a second company, and same thing, strategic acquisition, but second company that is a unicorn in the blue economy. So yes, unicorns do exist. There's hope when you are in that field. It's just making sure that you are on the right path with the right product for something that would again have the impact at core of your business, so that you're making money, but you're also making good impact. So let me give a last example that would be how impact can be used positively to make money. There's this technology that's currently being studied, and I know it's studied here in Israel in certain universities, but in my alma mater in France, an engineering school in France, they've developed that technology where they recuperate the shrimps, the waste from shrimps, and they're able to develop that substance that they use for cardboards, and they use it as films for cardboard is biodegradable. The properties are equivalent to the current solution that is used, which is using petrochemicals to print cardboards. So, you know, you have a solution here that's both economically proven, because it's actually cheaper than the standard on the market. It's saving waste, because, you know, this shrimp waste goes to waste. And it is something that has a potential to be used by the big names in the market in AI right now, the Intel or NVIDIAs of the world.
Sounds very interesting and great innovation. We don't have time for all the questions, but we can't ignore the situation now in Israel. So, Yoni, this one is for you. Do you think that Israeli startups are running into some kind of silent boycott with global investors? If so, maybe you can tip us how funders can pitch work around it.
Actually, I don't. As long as startups, and this also relates to the second part of the questions, as long as startups prove their actual value and their ability to scale up and in the end produce real products with real revenues, then you're at least at this point in time, you're still okay.
I see that Henry agrees.
Yeah, I can give you just.
I come from the US and I agree. Yeah.
That's some good news.
Again, I can give one example of one of my portfolio companies, a company called Kapao, also in a sense related to this world. Kapao just raised less than a year ago an A round with very significant valuation, led by Toyota Ventures, again, a foreign investor, because they're doing something which is worthwhile. That simple. So in the end, just prove your worth. Show that you're worth it.
Okay, so let's end with tips and your thoughts about how Israel can take the blue tech to the next level. Ilan, let's start with you. But if you can in one sentence, because we're really out of time.
I think we should look at the example of cyber. Israel is known as a cyber hub, right? Providing huge amount of value. This puts every cyber startup in a great position. They're saying we are an Israeli cyber company, right? So it gives them a head start. This is what we need to have also in this space.
Okay, Omer?
I like the cyber example, but in general, it's just the Israel story. The best companies out of this country are those that are agile. They change, they adapt. We spoke about AI. We talk about the war. Just kind of find the opportunity and go after that. Don't be afraid. The best clients I've had that achieved the most successful exits are those that continued to evolve their company again and again and again until it worked out.
I think that the fact that we're all here under the center of for blue economy and with HiCenter's involvement means something. So the government on one hand needs to support, on one hand do what's called laissez-faire. Don't interfere. Let entrepreneurs build what they need to build and let them do that.
Yeah, from my side, in the biotech world, clearly Israeli companies are welcome in the US, and particularly I live in Miami. In Florida right now, there's a lot of investment in the biotech field. Florida is absolutely eager to grow that sector, and is very friendly with Israel. So, you know, you're welcome to come and develop the company for access to the US market in Florida.
Great. And I'll just add to that I think for Israel there's an ocean of opportunities in terms of robotics, sensing and analytics, because as Henry just mentioned, we know more about what happens in the moon